Hey friends, welcome back to the channel. I've got a really cool video for you today. Now recently I've been spending a lot of time learning intraday trading as part of my journey to becoming a well-rounded market participant. I'm sharing this video because I expect 2024 to be a tough year for the real economy, and this skill may end up being a very valuable high-income skill set where certain folks who commit to this area could develop a long-term side hustle that pays them month over month over month. Now, in addition to the traditional long-term investing strategy, I would label myself as a market participant who participates in three time frames: intraday, intermediate term, and long term. And in this video, I'm going to share with my friends here why I made this decision to add intraday to my repertoire, what are the considerations behind intraday trading, and what I plan to do with this skill set going forward. I'll also share the psychological considerations surrounding intraday trading, which I think many people may resonate with. I treat intraday trading as a separate purpose to generate cash flow from the market when statistically high probability setups show up. In other words, if investing is the main course dish, intraday activity is a very nice dessert. People who are very familiar with my intraday work read my Substack letters, which I publish during the weekdays, so definitely subscribe below. I post my higher time frame ideas on YouTube. First, let's talk about why I made this decision. Long-term friends on the channel know that about 50% of my research and strategy has a US orientation, and the other 50% has a China orientation. Because my big picture macro opinion is that the US is in a bubble and that China's markets will take time to heal and are in a choppy state of recovery, I wanted to see if there was a way to generate cash flow in the market without fully relying on the market to go higher. Now, the US market has traded in one direction, yes, higher. And while it can keep on going, I don't believe that this easy environment lasts forever. For this reason, I'm preparing myself for the eventual transition to a more choppy and contested market, and yes, even the possibility that the market may return to a bear market in the future. It is generally, and this is a key word, generally, a bit more difficult to make money with long-term investments when stocks go through a corrective period or a bear market. Yes, it's still possible, but it's much more difficult. However, I found that with personal experience, it is possible to squeak out a modest profit more consistently with intraday trading on flat tapes and even on down days. Now let's talk about why I have chosen to pursue this strategy. I read from trading psychologist Dr. Brett Steinberger that certain timeframes in the market may be more suitable to a particular person based on personality. And for me, that was enlightening. To translate what this means, it means that some people are just naturally wired to be good investors. And these are folks who have unlimited patience, they never sell, they only buy on strategic dips. These folks have the most important characteristic in investor psychology naturally mastered: an unwavering view on the long term, and they don't care at all about the short term. My younger brother is a great example of this. He buys stocks and literally never looks at them again. He bought New Oriental, ticker EDU, a video I made back in 2021, at $26 a share. It's now at $90. He also bought AMD at $75 to $80 a share, and he simply just never looked at it again. Very few people are able to have that type of orientation. Then there are folks who tend to use active strategy on intermediate time frames in 3 to 6 month increments where they target cyclical activity in a particular sector or investment theme. For example, looking for semiconductors and when the next rally may come, looking for the China rally and when it may come, and looking even for sector rotation opportunities in the Dow. And finally, there is a cohort of people, definitely a smaller group by definition, who have found their niche in intraday activities. In this time frame, qualities that enhance the probability of success is quick thinking, high pain tolerance, and mental flexibility. With intraday activities, the goal becomes to target a piece of the action, not necessarily the whole meal. And when it comes to intraday, the most important variable is controlling ourselves, our emotions, and following our plan. Now, before I started intraday activities, I did a lot of research on how many puts I need to sell, how many times I can afford to roll the position, how many contracts do I need to put on, how many points do I need to secure, and even how many stop loss triggers can I handle to manage my risk. I also know how many points to look for based on my journaling and statistics based on the pre-market action. I found that good days usually get better, but bad days, they typically get worse. So for this reason, if I can see that the day is really unfavorable to me and my plan, and it doesn't cater to my strength, then I take the loss and I move on. For example, I tend to trade better on days where there are large gap downs, and I trade decently on flat tapes, but when the market gaps up, if I'm an intraday player that session, I've always found that those sessions, those gap ups, to be much harder for me to participate in, especially because I like to trade on the long side. From my own journaling, I found that trading less is usually much better than trading more. Some days have very good setups. Some days there's nothing to do. Much of our effort is waiting for our plan levels to arrive and then taking action. Most important to intraday activities is to keep a journal, and I want to bring you into how I do so. I want to share my routine when it comes to journaling and reflecting on the past week's market outcomes. Typically, I'll head to a coffee shop or a bookstore to do the reflection for the week. I found that in order to be objective about my actions, I need to have a journal to document my transactions. When I go do this weekly routine, I have a couple items with me. The carry I bring is a neat bag from Bellroy called the Tokyo Tote Pack. It has a hybrid professional look where it has a nice combo of formality and casualness at the same time. The bag is able to be used like a tote or a backpack. As a backpack, it has a nice sleeve for up to a 15-inch laptop, and there are multiple internal pockets that can neatly keep your notebooks or other belongings. For me personally, my bag from Bellroy is very convenient if I'm looking to carry a few essential items, such as my iPad and a couple notebooks, which I use as my trading journal. I now journal on a daily basis and review important key areas such as daily macro context from the economic calendar, previous day's key levels and what may happen if we revisit them today, my estimated size of reaction to economic data, and my line of thinking when I see a certain price action structure develop. Do I feel fearful? Do I feel like I can't get in because I just missed the move? I document these mental feelings throughout the day. I found that journaling and organization definitely improves my mindset and preparation for the next day. These days, I do a lot of my work from home, but I go to coffee shops when I do reflective sessions to step away from my default environment. I found that the biggest challenge for me in active trading is psychology, mindset, and execution. Anytime I have a difficult session, I know that the issue is not the market, it's not the circumstances. The issue lies solely with me. The only way to tackle psychological barriers is to journal. The more I journal, the more I understand myself, the more I understand my own tendencies, and the more I have been able to manage calmly in stressful market situations. And my Bellroy Tokyo Tote Pack is my go-to practical item to bring whenever I leave the house to go on these reflective sessions. It keeps me minimalistic, it keeps me organized, it makes me focused on the essentials, which is important because clean and simple is better than complex and messy. Bellroy is a certified B Corporation in which certified companies use the power of business to help solve social and environmental problems. The body fabrics and linings of all Bellroy products are made from 100% recycled materials and come with a 3-year warranty. The company is based in Melbourne and is a very large hit with consumers in the US, and I certainly like it. Thank you to Bellroy for partnering with my channel to provide my viewers with high-quality gear to help them with their work or routines. For me, it's my journaling sessions. I am so happy that this premier brand is giving 10% off to my audience on anything from bellroy.com. See the link below. For 2024, I want to participate in all 3 timeframes, particularly because of diversification reasons. If markets go up with no interruption, well, it's likely that my long-term index funds will beat out any strategy. However, if markets begin to fall, correct, or enter a choppy back and forth state, then I have a chance at generating cash flow while my long-term investments take time to muster through that environment. Another problem that is mitigated in intraday timeframes is the natural tendency of FOMO, fear of missing out. This is because the markets are open 250 sessions per year, and I have found that there is opportunity on most days to catch some type of action. Obviously, some days have smaller opportunities and some days have larger opportunities. By increasing the opportunity set, I now psychologically do not experience as much FOMO because I know that by tomorrow, I have a brand new session to find new opportunities. So the key takeaway behind why I'm adding this skill set to my arsenal and sharing it with my readers and my followers goes beyond my own experience. It's important to recognize that we as market participants, due to our character, due to our personal tendencies, we could be particularly suitable for certain timeframes. Now let's talk about the considerations of intraday trading and what it entails. To start off, I want to talk about the goal. The goal is really important. And the primary goal is to capture a small piece of the daily fluctuation. And the way I do so is via US index options and futures. And it can be the S&P 500 or the NASDAQ 100. I typically use the indices ES and NQ, or their micro editions MES and MNQ, which are the proxies for the S&P 500 and NASDAQ 100. And I use them because they respect concepts such as order flow and technical analysis more than single stocks in a daily trading environment. In the long term, fundamentals are the king in terms of driving markets higher or lower. But in the short term, especially on a daily basis, technical analysis plays a far heavier role. So for example, if the NASDAQ has a 200-point day from open to close, my goal personally would be to capture about 10 to 20% of the day's range. So if it's a 200-point day, then 20 to 40 points. If the day is really tough on tech and I'm trying to look at the long side, I'm honestly happy then with 8 to 15 points. So say 5 to 7% of the range. If the S&P 500 has a 40-point day from open to close, I would be looking to capture about 4 to 8 points. If the session is very flat or the range is small, then the opportunity set is also smaller. Now, from personal experience, the most important thing that I have found is to set proper expectations. If I have the wrong expectations heading into the session, I set myself up for disappointment. And if I have the right expectations, then my mindset is primed and in the right gear to succeed, or at least maximize the chance of success, because trading is based on probabilities. Now, given the random walk that the market goes through in a single trading session, I believe that capturing 10 to 20% of the day's range is already very, very good. The reason that I think this is good is that we are aiming for longevity. We're aiming for consistency, and we're aiming to do this on a repeatable basis as a diversifier to complement our long-term investing. I talked about this in a recent Instagram post where I shared how if I can personally finish trading earlier in the day and be done, that is absolutely my preferred state. I don't want to sit in front of the charts all day long to hit my daily target, if at all possible. I said at the beginning of the video that I do not think that intraday trading should replace long-term investing for most people, and I strongly believe this to be true. This type of activity has its niche value in time frame diversification and offers an opportunity to see modest green when the markets are red, but it's no replacement for the tried and true approach. Now, there are many ways that you can participate in intraday trading, and I'll list out a couple setups that I personally look for. I like to look for low of day, or find a local low of day. I like to look for failed distributions, failed breakdowns within the session, and I like to sometimes ride downside or upside continuation up to a certain point. Remember, catching a piece of the action. It's nothing super complex, but from these setups, I'm looking to capture a very small piece of the move afterwards. The way to do this is up to the trader's preference, risk tolerance, and account size. You can buy the index exposure directly, you can buy calls, you can sell puts. For people who have a very risk-on mindset, you can take the pressure of immediate exposure. There's nothing better than buying ES or NQ futures directly or their micro counterparts when you believe it's going to go up based on your research, and it does go up. The reward is immediate, but then so is the pain. For people who like to use options, buying calls or selling puts is an option as well. Just beware that there's theta decay if you're going long options. I'll give one example directly shared with my newsletter members. This one was also shared publicly on Instagram as well. This day should be memorable to a lot of people because it was the big CPI day back in early February. Inflation data came in ahead of expectations, and in the pre-market after the data release, the S&P 500 and NASDAQ 100 futures were down very sharply. So in such a big gap down, my focus that day was to identify when the low of day may start to form. This is where order flow, technical analysis, and statistics on daily session ranges come into play. Once we identify a region where we think the low of day might start to form, then our target is to capture a piece of any modest recovery based on a person's preference on how to gain exposure. Once that target is established, our goal for that session is complete and we are done. You will see that I missed the short setup after, I missed the long setup that came after, but that's not the point of intraday trading. Our one and only mission is to find one good setup or two, get a piece of the action, and that's it. And then we walk away. This isn't a replacement for long-term investing. For me personally, I give myself a daily quota, a daily goal. If I see $300 to $400 in unrealized gains, I immediately set stops to lock in that region of profits and I stop trading and let the market run if it wants to. Now, how do we set these quotas? I set quotas from the perspective of I know how much exposure I need to put on in order to hit that target. If I want more than that profit number, I'm going to need to put on more exposure, which also means that I need to put on more risk. Okay, now we'll talk about what I plan to do with intraday trading in the future. One of the areas that I found that intraday trading has helped me is actually on a personal level. Participating in this time frame means that I have to be extremely disciplined as well as fully understand and manage my own emotions. This means that risk management is extremely important and forming plans is essential to success. In the intraday world, I found that we will be rewarded if we are disciplined and if we study our journal of activities, do what works, and do less of what doesn't. When I press the buy or sell button, I now retroactively study the region where I participated, what I was thinking, and if this setup were to come again, what would I do differently, and would I take the same setup? Previously, in my long-term investing approach, because it's a buy and hold method, I would buy a company if I simply liked the fundamentals and the narrative. But these days, even for longer term ideas, I wait for key levels to come in, even if I have my long-term hat on, and then I would wait for the most optimal entries when possible before doing anything. In other words, I apply a much more technical analysis and planning heavy approach from intraday trading into my long-term investing. Now, more important than anything else, intraday activities have convinced me that I'm forever a mere student in the markets and that I'm constantly learning new things because that is the only way that we can survive the next intensive corrective cycle. Success in my eyes in intraday activities is not always just about profits, it's about following a really good process. While I have on average been able to make between 200 and 400 a day consistently from this activity based on my own sizing and risk tolerance, after doing this for some time, I've realized that trading is honestly a really lonely endeavor. This is why my community on YouTube and Substack are so important to me, because it brings me joy when I see others succeed. I wish everyone big success in the timeframes that they choose to participate in. I'm always learning, and what I can do to help the folks, I will continue to do so. Hope you enjoyed this video. Please subscribe here on YouTube, turn on the bell, and on Substack, leave a like if you enjoyed the video. Thank you to Bellroy for helping me with high quality gear, and I will see you all next time.